the retirement savings mistake that is costing you thousands of dollars, or in this case, over $1 million. Because strategic women build tax-free wealth. They don't want to share their wealth with anybody. They don't want taxable wealth. They want tax-free wealth. I'm Jessica Weaver, founder and owner of The Wealth Boutique, and we help hundreds of women with this exact example every single day. This is the work that we do with our clients, and we're bringing it to you right now. Last week, I spoke about the seven-figure portfolio. What does a seven-figure woman, how are they investing, where are they putting their assets? So we're diving into that third bucket today and a little game of who will win, pre-tax or post-tax. On the right side here, you're going to see that traditional bucket. This is your traditional IRA, 401k, 403b, 457, deferred comp, all of that. Over here, the money goes in and you get a tax break that year. And this is one of those things, strategies that accountants, CPAs are not talking about because it gives you a tax break this year. So their goal is to save you money now. Our goal as wealth advisors is to help you build tax-free wealth and getting your wealth to last, not just your generation, but multiple generations. That's why not only our clients work with us, but they want their kids to work with us and their grandkids and even their great-grandkids we have. Anyway, so over here we have, this is a $500,000 IRA for a woman who is 48 years old. This isn't taking into account if she's continuing to contribute to this account or not. This is just looking at her $500,000 pre-tax money. It went in, she got a tax break, it grows tax deferred. She pays no tax on the money until at least age 59 and a half, or she hits retirement age, and then she pulls it out and it's taxable at ordinary income tax rates. So looking at here, she's going to pay $662,000 in taxes when she hits her required minimum distribution age, which for her is age 75. If she reinvests some of that money, she's going to pay an additional $247,000 in taxes. Then when she passes away, if she predeceases her spouse, her husband will inherit this money and pay $677,000 for taxes. Or if her husband's already passed, goes to their children and they're gonna pay the $677,000 in taxes. Another thing that CPAs don't talk about a lot is the widow tax, the widower tax. Widowers end up paying an additional 30 to 40% on average when they inherit an IRA, because guess what's happening? Their tax brackets just went from a much more lenient married filing jointly to a single. Yet they still have to pull this money out for RMDs. And then your children, when they inherit this asset, they have 10 years to take the money out. And they might be earning some good solid income at that point. So now they're gonna be paying a lot more in taxes, so an additional 30 to 40% on average. So you can see very quickly that this wealth just got cut by a third and then another third. So total taxes for this pre-tax bucket is $1.58 million. It was worth $500,000. Or you can be strategic, work with us, and we look at, does it make sense to move into a Roth? This is looking at converting this money over to a Roth over a 10-year period, and they'll pay about $150,000. Now this is going to be dependent on what their tax bracket is each year, so that number can change a little bit, but you can see right away, we just saved them about $1.4 million in taxes over their lifetime, and the wealth being passed on to their children, that next generation. So in this game of who will win, the after-tax Roth bucket wins. Now, when you convert this money, you will have to pay tax on it. You'll be paying tax at ordinary income tax rates. A lot of advisors are going to tell you to wait until you're retired to do this. But let me ask you, would you rather convert $10,000 today or the $100,000, $200,000 that it grows to down the road? Today. So it's important to work with us and an accountant to see what is your tax rate each year, what can we convert without bumping you to a higher tax bracket, and doing the work ahead of time to prevent this huge tax bomb. $1.5 million and the account was only worth $500,000. We're paying triple in taxes of what the account value is. So if you're curious at all, we run this calculation for you, for our clients. You just have to reach out to us at thewealthboutique.com and we will align you with one of our very strategic advisors to help you figure out who will win for your portfolio, pre-tax or post-tax. And when would you rather pay the taxes on the money? On the little bit today or the million that it grows to down the road? Probably the little bit today. Well, next week we're going to dive into another one of these buckets, the legacy bucket that we spoke about last week. So stay tuned and join us for another one of these money trends.